guys. Thanks for hanging on with us. I'm Brianna Valesky here with Joel Elconin on Benzinga's pre-market prep. We have Karl Snyder on the line. He's the Chief Market Strategist with Garden State Security. Karl is also a member of the Market Technicians Association and holds the Chartered Market Technician designation. Karl, how are you doing this morning?
I'm doing great. Good morning. How are you guys?
Great, great. It's a beautiful sunny morning here in Detroit, so we really can't complain. Bank stress test. That's what's on the radar today. We've got a lot of these big banks moving around here this morning. I know Bank of America. We were talking about Citigroup right now. Can we get your thoughts on these?
Well, sure. As I was listening earlier, and you were talking with JC. First, I'll just talk to you about Citi. I completely agree. I mean, you're in a stock that's done nothing. Now, he's a little bit more of the idea, well, maybe he likes it for that reason. But I've seen no reason until that can do something, get some sort of momentum, kind of break out of it. It's done nothing since 2009. And then recently we've had a gap down in
Thousands
Citi.
more people across.
Recently we've had a gap down in Citigroup, and needs to fill that short term. That gap occurred earlier in the week. Now, Bank of America, a little bit different story as far as the charts are concerned, and what I'm looking at. It's something that I would maybe put on the radar. I wouldn't necessarily get involved right now in a Bank of America. You've got some support around the $14.50, $15 area, and that should be decent support near term. But I think in order to find it interesting, you need to get above $17, or at least get above 16.75 and maintain a 16.75 level on Bank of America. And if that occurs, it gets to be a little bit interesting, and then you can start to maybe nibble at it, if you will.
Okay, just shorter term, just looking at the charts. I know you're the chief market strategist. You looked at a lot of charts here. Looking at the Citigroup, it's been 54 has been major resistance in it, and you're trading above it in the pre-market, up $1.77. So, would you just kind of like, if you've been stuck in this thing the last few days, would you use that as a potential exit point? I mean, so you're not as excited about JC is about this breaking above 54.
No, I'm seeing the last pre-market trade go off at now at 54.06. So I don't even know if it holds 54. We still got 30 minutes.
Okay.
So you've got a lot of, it's up, but as you see over the last, few trades, it was 54.20. Last trade I saw was 54.06. I'd wait to see what happens. Wait till it opens up. Obviously, you got a lot of people in the pre-markets. 54.01. There's your last trade now, who aren't so sure about that. So that's great. 54 is a primary level of resistance if it can hold. First 15 minutes or 30 minutes of trading are always, fly by the seat of your pants sometimes, unless you're just a massive trader and you've got that pinned down. But, for your average retail investor, that's just, you can't really gauge anything by the first 15 minutes or so, or the first half hour of trading, So would I get out? If I got in and I had a big enough piece and I just wanted to come out on a trade, sure, why not? I mean, if I made a couple points on a stock, if I wasn't looking for it long term, if I'm a little bit more long term and I was a little bit more bullish in my thought, I'd be eyeing 54 this morning, and being close to see if it settles. If you're willing to let it do that, we'll probably go below 54 as some people take profits, but see how it settles in that first 15 to 30 minutes of trading.
And just X out laugh, just your comments on that came off pretty hard with the market, at the end of last week and early this week. Is this something that you have a long-term position in, or give us your comments on the Spider Select Financial ETF?
Sure. Looking at it, the XLF, I wrote a little bit about it about a week or so ago, that it was starting to look really interesting at that 24.50 area. If you kind of see that through the month of February, that was your resistance, and it looked like it wanted to break out. Now, obviously, a lot of things move with the market. The majority of stocks and or sectors will move with the market. But now we have that gap down that occurred 2 days ago, so you have a gap in price. It gets interesting to me if it gets above 24.50 and can hold 24.50. maybe we start to make some headway with the XLF. And until it gets above that, I see better places sector-wide in the market. On relative strength basis, the best sector right now is your discretionaries, the XLY. That's the best place that I see, as far as sector leadership based on all of your market sectors, broad market sectors. That's the best sector right now.
Karl, we have to ask you about oil. Obviously, immense amount of volatility over the last 6 months. Are you doing anything in crude oil right now?
I do write about it. A lot of my guys at the firm, always consult with me, want to know what my thoughts on oil or energy trades are. It's not interesting to me yet, and the reason I'm saying that is until at least let me take that back. One spot that's very interesting in the energy space are the refiners. But let's talk about oil. Oil is stuck in this trading range of 45 to 55, and that's going to be your tell. When you can break out above 55, we could start to see some traction. I'm not an oil trader, but I pay attention to it. I use it because I want to know if I should get involved in the energy sector, et cetera. But until oil can really get above 55, it's just trading range and noise to me, or unless we break down and it starts to get near 40, because that was always a long-term resistance area going back, at the 80s, et cetera, the 90s. If you can get to near 40, it gets very interesting to me to say, well, maybe this is all washed out now.
What about tech sector? Obviously, tech is really hot right now. We had the Apple event earlier this week. Is there anything that sticks out to you in technology stocks?
I'm starting to watch the semis. I've been long the semis, have liked the semis for a very long time. They're running into a little bit resistance right now. Right around they didn't get there. They got close to it. They almost got to 740. But I like to look at long-term charts. And the 750 area is really the long-term resistance. Going back on a monthly chart, 750, 760, which is also a 50% retracement of what happened from our 2000 highs. And just put this in perspective, the semis were at 1362. I'm talking about the SOX, SOX, the Philadelphia Semiconductor Index. That was at 1362 back in March of 2000 and was at a 167 low in 2008. So we're at a Fibonacci level, roughly, and I don't use the exact numbers with Fibs or Fibonacci's, so some people may say I'm not using them correctly. I like to see where there's clusters in prices as well, because then otherwise the Fibonacci's I don't pay as much attention to. But right now we're at resistance, so we may give back a little bit. 700 is a level I'm watching, though, on the semis. And semis, when you have technology doing well, you want the semis to do well, too. That's always been historical. Now, historicals don't always mean that's going to continue, but historically, if NASDAQ, overall tech is doing well, you want to see the semis do well. So long-term trend looks really strong with them. We're running into some resistance. We want to see the 700 area hold. If that doesn't hold, we may get some more selling because that's where they broke out most recently, was the 700 area. But if they break below that meaningfully, we'll probably see them go back down and somewhere in the 650, 660 area, more of a deeper sell-off. As far as Apple's concerned, I got to disclose that I do have a position in it for clients. So I recently have taken some off. I thought 135 was going to be an area of resistance, and it got close to that. And we're looking at some give back now, and the market's really not all that happy about what's going on with Apple's pricing. Just to that point, though, I remember how bullish people were on Apple was 2011, 2012, when they said, and analysts were coming out with a $1,000 price target. And what I just said is there was recently a price target put on Apple of $150, maybe about a month or so ago. I don't remember the analyst. And what I did is a quick shout out to people that follow me and stuff, saying, put that in perspective. That reminds me of the $1,000 price target, because for split adjusted, we're looking at almost $1,000. So that 150 kind of took me back and was like, sometimes when you get that a little bit of enthusiasm. What you want to see with Apple is you want to see this 120 area hold within it. And that's the thing about prices. If you're a trader, you have your exact levels. If you're a long-term investor or intermediate-term investor, you want to have an area. So you want to say 120-ish, 119, see that. You want to see that level hold, though.
Okay, what Carl is referring to here, and just going to the ratings on my handy Benzinga Pro here, you've had a couple upgrades raising the price targets. Actually, the 1, 2, 3, I'm looking at the top 5 analyst moves, the most recent analyst moves were all raising their price targets, actually even going farther back, 1, 2, 3, 4, 5, 6, 7, 8. And they've all bumped it up from the 145 to 160 range, kind of all jumping on the bandwagon here, and that is eerily similar to back in 2012 when it did top. Do you pay much attention to the analyst ratings, or do you really pay attention when they're all herd together in the same direction?
Well, I like to pay attention to what they're saying. I mean, it kind of gives you a viewpoint. I mean, even though my doctrine is a technical analysis, I started out with fundamentals. I'd like to, put it all together. But I like to hear what they're saying. Maybe I'm missing something. Or sometimes I like to hear what they're saying to see if it's really outlandish. But there are some really bright analysts out there who put out some good stuff. But the main thing is, obviously, you want to stick to your trends in the market, or you want to look for your reversals. So I do like to look for what they're doing. It gets a little bit overzealous when everybody, like you mentioned, are herding together, when the analysts are all saying things can't get any better. And when that happens, when things can't get any better, we all know what happens then. They can only get worse, right? So unfortunately, as a company, Apple's a great company. Stock price is under some pressure. To continue its intermediate trend higher, I'm looking at 120 for it to hold. Otherwise, I think you're going to have more corrective action. And that can weigh heavily on the markets, because now we have Apple going into the Dow in the next couple of weeks here. So that's something to pay attention to as well, how that's going to affect what goes on with the Dow Industrials.
Okay, the dollar up and away, the UUP here. What's your take on that, JC? It's kind of going with the fade the herd mentality. Everyone's talking about it, but boy, you can't argue with the technicals here. That's a strong looking chart, the UUP.
It's a great one, and I know we're using UUP as a proxy. My notes are on the U.S. dollar, so I hope you don't mind if I use that.
Sure.
That's how I kind of look at it. But I'll use definitely the UUP is definitely a good proxy and a good way to invest as well. I mean, they move very similar, so if you want the dollar exposure, using the UUP is definitely a way to do it. What I'm seeing here, I sent out yesterday, is that the dollar hit and actually broke long-term resistance of 99.49 going back to August of 2003. That's on a monthly chart. I have been bullish on the dollar for quite some time, and that bullishness was over the summer when the dollar broke out in the summer of a little trading pattern, and a lot of people didn't pay attention to it then, and I thought that looked really good, and that's actually going back to August of this past year. It broke out of a little triangle and then a horizontal resistance of 81.40. We've come a long way since then. Right now, we're looking at some parabolic moves in the dollar. So right now, your resistance, it's right above resistance. What I'm looking at is we're at a Fibonacci level right here. And that being said, that could provide, so like I mentioned to you before about the Fibonacci's, when you have a cluster of Fibonacci areas or price around the Fibonacci, that's when I like to pay attention to them. However, I do think longer term, the dollar, my price objective has been and continues to be 107 and 108 on the dollar, which would be a 78.6 retracement from the high back in 2001 of $1.21 and the 2008 of 70.69. Very near term and short term, though, I think the dollar is overextended. I still wouldn't be surprised to see some downward pressure on it right here, especially if we can't get through that century mark, the $100 or the 100 level. And if that's the case, You may see a few points tick off of that, and I wouldn't be surprised if it went back and tested where it most recently broke out of a little flag pattern of around $95, 95, 96. Uh, it's the trend is very much bullish if you get a pullback. What I would be concerned is if you got a really major sell-off and 7 points away breaks below 92, and this dollar run is over. In my opinion,
What do you
that's still a little bit of ways though.
What do you think? What do you think's driving it? You just think it's interest rates going up? What do you think's driving the dollar?
I mean, we can all hypothesize. I mean, no doubt the trend is the trend, and that's what you want to stick with. A lot of it, I think, a flock to the safety, the U.S. dollar, a stronger dollar, and it's been that way. So the trend has actually been there for a while before people talked about it. But now you're seeing as currencies globally are getting weaker, and there's this scare of deflation, low interest rates. Yeah, that money's coming here, especially into bonds, U.S. Treasuries. So that may be, I think that yields can maybe go higher, but I don't think yields can go substantially higher. As long as you see the dollar going up, and as long as you see the yields in Europe, especially, continue to go down, people are going to look for a place to get some sort of yield, or a positive yield for that matter, and so that's why I think the dollar strength is here. I think it's very overbought here, but that's always a bullish thing, overbought, and within trends, it's not until you get to a very big extreme, that or where things can't get any better. So yes, a lot of people are looking at dollar strength, but I don't think we're at an extreme. I think short term we may be at an overextended point, but I do think we resumed this dollar strength.
Okay, just final thoughts on the market. Had a sell-off over the last couple days, kind of stabilized here. Good stress test results here. You think, is this the pullback? You ain't going to get a chance to buy anything, the stuff cheaper?
Well, this is where I'm going to come in with my levels again. There's certain levels. Right now, the short-term trend is definitely negative. And when I say short-term trend, daily trend over since we've been selling off. I had looked at 2080 to 2090 to be some sort of support. We've broken down through that. We're right now around 2040. So right here is where we want to hold support. Otherwise, we're looking at about 2020 on the S&P, and then potentially going down to about the 1980 to the 1990 level. And that's still just, a normal correction. In order to see some upside right now, the levels I'm looking at to get a good bounce, we want to see us get back above 265, 280 level. Initial hurdle would be about 265. If we can get it back above 280, I think we can resume the trend. Otherwise, we may just chop a little bit more and may see some further downside.
Okay, we've been on the line with Karl Snyder. He's a chief market strategist with Garden State Securities, joining us here on Benzinga's pre-market prep, brought to you by MarketFi. Karl, thanks for the input. We look forward to speaking to you again soon.
Thanks, Carl.
Thanks so much.